All right, guys, welcome to Oasis University with me. So, I don't know if any of you guys know me. I know a couple of you guys know me from High Roller Chat. Um, but I'm in High Roller Chat pretty much 24/7 during the market hours, and I mainly teach flow data, market data, GEX levels, and all that. And if you guys don't know what that is, I'm going to go over it in today's presentation. And you guys know me, I don't like just rambling for hours. So I know a couple of you guys have prepared some questions and stuff. So I'll open that up pretty soon. I'd much rather do like a discussion based class than me going through these slides and just talking nonstop. Because I'd rather you guys learn more in a discussion based kind of thing than just me talking. Even though this will be recorded and stuff, I do much better in that aspect too. Just whatever it is in life in general, I feel like I learn the most just by asking questions and doing things hands on. You know what I mean? So that's how today's gonna go. I did prepare like a short little slideshow to kind of like guide the conversation if you guys would like, and I'll be sharing this too later on. I think there's a section in the Oasis University and the mentorship thing. Yeah. Oh yeah, slides. I see it. So I'll be putting all these in here, so you guys can look at them as well, um, if you guys are interested in that. So let's go on to the next slide here. So the agenda for today is we're going to be talking the flow data. I'll help you guys understand what flow is. I'll go through each order. I'll go through the live data because I know Champ talks a lot about Flowtopia. So I'll be going over every little aspect of the orders that come in with flow data, and then what I look for as well. So look for the basics here, how it works, what I look for, and then I'll be talking about the repeat option orders, and that's a big one that I look for my trades. And then I'll be going over some GEX levels, gamma exposure, and how I utilize that as well. I've already done a presentation on GEX and MarketNet Flow in the past in like November or December, I think. So if you guys weren't there for that, I believe you can watch that in the recordings tab in the mentorship section. So feel free to do that. You just have to scroll up a ways, and if you guys can't find it, I can link you to it as well because I have the video on that. But that was a really good class. I suggest you guys watching that. If you don't understand really anything that I'm talking about today, you can watch both those again. The first one was really good. I had a good time doing that. But I got into a lot of the specifics of MarketNet Flow, this section here that I talk about all the time, and then the gamma exposure levels down here that I talk about. But I'll briefly go over each one of these today. But that other one, that presentation I did back in November, will be the one you'll want to really watch if you want more specifics on that. Okay. Let's see. Okay, so let's go on to the next slide here. And then I'll take some questions after I talk about this for a section, or for a second. So this is the live options flow. This is on Traditix actually, but it's roughly the same on most platforms. You have Blackbox, Traditix, Flow Algo, Flowtopia, and stuff like that. And I can show you guys exactly how it would look like on all these different platforms. So if we go to Flowtopia, I can pull it up here as well. So here's the real option flow data down here in this section. It's coming in as we're talking. So here's all of the calls on NVIDIA and stuff like that. And then if we go over here to Traditix, it's roughly the same information. So yeah, so let's talk about each one of these little orders here. Let me move on over to here. Let's see. What do I want to talk about here? I think it's right here. Okay. So here is one singular order of NVIDIA. We'll talk about each one of these things here so you guys can understand what each little tab here means. So the time, it's pretty self-explanatory, honestly. You guys probably already know most of this, but it's also always good to refresh on what each of these things mean. So this slide is actually really good because I make descriptions of each one of these things. This is a good one to put on your wall. Really, you can print it out and put it on your wall if you want. But the time, it's just the time with which the order was placed and pushed through the exchanges. So that's right here. So 15:53 Eastern. Most of them are Eastern time because that's where the stock exchanges are in New York City. So 15:53 Eastern. So that's 3:59 and 34 seconds. So like right before market closed, that order came out. And then the symbol obviously is the ticker. So you see NVIDIA here. That one's self-explanatory. The trade is the type of order, whether it's a sweep trade, block, or split. And then I have the definitions of which each one of those mean. The sweeps are the big ones that you really want to be paying attention to. Those are multiple orders across different exchanges, and those are the really big ones. And the ones that, I mean, you can pay attention to, but I don't really, are split trades and then block trades. And the definitions are there for you to read if you'd like. And then the trade right here. Oh, sorry, we already went through that. And then C and P is obviously call or puts. That one's self-explanatory. The side is, this one is, I pay attention to this one a lot because it tells me a little bit into their mentality of why they're getting into the trade. So trades that are above ask are the ones that I tend to look at the most because those are aggressive, right? So you have the bid and the ask on option contracts. And then the bid are usually lower, and then the ask are the higher prices, and you'll get filled immediately if you put in like an option contract at the ask, right? So the above ask ones are the orders that the user put the order in above the asking price. So those are super aggressive orders because they want to get filled right away, right? So that's that. That's the side. There's at bid, below bid, above ask, and at ask. If you guys have questions on that, let me know after I go through all these. Strike is the strike price of the option contract. That one's self-explanatory. So 122 strike price on NVIDIA is this order. And then the spot price is just the price of the underlying at time of execution. So NVIDIA was at 122.58 at the time of execution of this sweep call above ask order. Oops. The expiration is just the expiration of the contract when the contract expires, July 5th. So this one expires on Friday. Let's see. Size. So size is the amount of contracts this person bought. So they bought 168 contracts of calls on NVIDIA. The premium is the amount spent, $32,000. They spent $32,770 on this order. Price is just the cost of the contract, $195 per contract, $195. You guys understand all this pretty much, I'm guessing. The volume is the volume of that specific contract. So this one had 192,311 volume, and then the open interest 13,941. And the implied volatility of this contract is 35.61%. So that's a lot. I have definitions of volume, open interest, and implied volatility as well down here. If you guys have questions about anything about this or pretty much anything, I'm going to open it up to you guys, Fitz, Gospel, or whoever.
When you first showed that list of all the different tickers of like the flow coming through,
This one?
is that, yeah, on that page? Is that your short list of tickers, or is that how do you get to these specific ones? Because right, there's like so many options and
This one is
blocks.
just, yeah, this one's just live. So if you go on over to, I just took that screenshot from yesterday, this
Okay.
one. So I just pretty much took a screenshot. So all that data that you saw on that slideshow there, or this little screenshot, is just live flow. So all these orders came in like right at market close yesterday. Just by looking at the time there, you can see that it had 59:30 seconds. So it came 30 seconds before the market closed yesterday. But you can see all these orders. There's going to be constant orders coming in like nonstop, pretty much on whatever platform you use, Flowtopia, TradyTix, or whatever.
So what do you look for as far as, because right, sometimes I know you put out an alert like, hey, look at this one.
Uh huh.
Um, like, is it like a three things that you need to check off your box to be like, okay, it's got a premium over $1 million, and it's got to be a sweep, or like what when you're seeing this data come through, what are you looking for to see like, hey, that's something I might want to also get in on?
Yeah, that's a good question. So you guys can see, I mean, there's tons of orders that come in like every second, it seems like. And the question is by UFITS is like, what do you look for? Because there's so many, right? So it's a good question. And I think I made a slide on it actually. Let me see if I did. I think it's that one. Yeah, I think it was this one, the repeat flow. So, I mean, that kind of leads into this next slide. So it's really good that you mentioned that. So I look for repeat flow orders. So if there's multiple of the same contract coming out at the same time, or roughly around the same time, are the ones that I pay attention to. So I can give you guys lots of examples actually of what I look for, because it's not good to be looking at just like singular orders and be like, okay, this one, Amazon. Okay, they had a put at on January 17th, or sorry, they have a call. Sorry, they sold a call at January 17th, 2025. You can't really look at that and be like, okay, I'm just going to get into that right away, right? You got to dig deep and kind of figure out what you're looking for, right? So it's a good question. So again, I look for that repeat order. So I look for above ask orders. I circled it here. I look for sweeps, and then I look for premiums as well. So all these things combined kind of paint the picture to me of if I should get into that contract or not. So the first thing I really look for is there a lot of orders coming through on the same exact contract? If that's a yes, then I move on to the next thing. Okay, is it an above ask order, or what kind of order is it? What kind of fill did they get? So if it's an above ask order and there's a whole bunch of them, I'm like, okay, this is something that I need to dig deeper in. And then I do. So, and then I look at expirations if it's close enough. And then I also look at premiums. So if it's like above $1 million or more, collectively, that's really, really good. Now, Flowtopia doesn't have a section specifically for that to kind of filter through that. You can filter through it manually if you'd like to, but just by searching up the ticker, like say NVIDIA, I can search up NVIDIA and I can see all the contracts, and then I can filter through it a little bit better. So like say I want like a month out, and then I want to see the calls and then above ask orders like that. And then I want to see the premium above like 250,000, say like that. And it'll show me all the orders. So there's none that fit my criteria like that for today. But if we go on over to Tradietics, I don't know if you guys are familiar, but I talk about Tradieflow a lot. And that's exactly that. It's the tool that fits my criteria. So it shows me all of the orders that come in for each contract. So like the Tesla one I got into, I don't know if you guys are in high roll or not, but there was a Tesla repeat order flow on Friday, I think it was, or Thursday, if I'm not mistaken. So I look for orders that are above 10. So if there's multiple people, so this is telling me that there's 10 or more people buying this specific contract. So if we go back to, oh wait, why is it not showing me? Hold on, let me refresh this. It's not showing me the Tesla one. I guess I might have to manually do it. But there was a Tesla one. Let's see if I can find it somewhere. If you guys see it, let me know. It was somewhere on here. There's an ARM one. Where is it? Oh, there we go. I just had to refresh it. So here's the Tesla one. This one had 24 orders. Let me blow it up so you guys can see a little bit more. So this one was a big one. So this one had 24 orders on it. So that tells me that on the live flow, so here there were 24 orders of the same exact contract that were super aggressive trades. So that just filters it out for me a lot easier. So once I go back to here, once I find it, where'd it go? There it is. So this told me that there were 24 orders of this specific contract, the 190 call for June 28th, 2024. So if we go down here, you can see all of the orders that came in. There was so many. So I look for that specifically in the repeat orders. I see all the buys, and you can see all the premium spent on each one. So collectively, there was 24 orders and $1.4 million in premiums that were um, that came out once this order was triggered. So once this alert came out, and then collectively, I could see down here how many more buys and sells after that alert came out, which is really, really nice. But that's pretty much what I look for. Just repeat orders, aggressive orders above ask, close expirations with high premiums. I know that's a lot, but I hope that explained it.
When you're following like right like okay here is that like that Tesla order for example,
Uh-huh.
and you're like hey I'm gonna hop on that. Obviously the premium probably has moved up
Right.
already.
Yeah.
Is there a point where you're like, let's say originally it was $1 contract, and now by the time you found it, you've determined that yeah I want to it, it's like at $1.20. Is that still in your mind? Like yeah, I'll still get in on that, or is there a
Yeah.
certain
It
percentage where
depends.
you're like, okay, it's already gone too far up,
It
just
depends.
to get it?
Yeah, it really depends on the expiration as well as it's hard to say because it's different for each scenario. But for me, that Tesla one was so aggressive and it was so close expiration is I just freaking slammed the buy button on that one, like without really looking at anything. So if we go back to that Tesla one, that one came out on the 26th of June. And then the expiration was the 28th. So it was only a 2 day expiration. And you hardly ever see aggressive orders like that ever. And when it does, it hits, man. So it just depends on the
Someone just
scenario.
knowing something.
Yeah. So
That's just someone probably had knew that their order numbers were going to be through the roof or whatever, and
yeah, exactly. I mean, honestly, if you gave this one another week, you would have printed even more. But this one printed, it shows you on the chart. This one went up 300%.
yeah,
So it really depends on, just going back to your question, it depends on each scenario, right? So for this one, I would be super aggressive on that one just because of the close expiration. But we were talking about it in High Roller Chat yesterday, actually, me and Kool Aid Man, about this LLY one. Actually, I have it pulled up. So this one actually came out yesterday on the second. This was a pretty big order. 10 orders is pretty decent with 1.51 million dollars in premium. So this one actually went down about 40%, which is crazy because right when these whales got in, they bought in at like around $800 per contract on this one. You can see down here. So they were instantly down like 50% yesterday, but they continue to hold, right? So that would have been an instance where if I would have gotten in like right when that came out, I would have probably got stopped out personally. But seeing the whales here, they were holding. And then if we go on over to LLY today, this was a put, by the way. So um, they bought in like about down here. I don't know if you guys can see this chart very well. But if we look at it specifically, we can see that they got in at 10:23 Eastern time. So that's like right here, my time. So they got down here at like 8:87 or 8:88 on LLY. So they pretty much snabbed puts at the very bottom, which is awful. So they were instantly down 50% or so. And me and Kool-Aid Man were talking about it yesterday at market close. We're like, oh, this might be a good entry if they're still holding it, right? The whales were holding this contract. And specifically, this was a next week expiration, so July 12th. And then obviously that would have been a really, really good entry if we got in there, because would have gotten a way better fill than they did. We would have gotten in about like $300 or $400 per contract, and I don't even know what it's at right now. Let's see. LLY. Let me pull it up. LLY 870 puts. Let's see. 870. Yeah, so those are up back to $800 per contract. So we'd be up well over 100% if we were just a little patient there. So obviously it's different per scenario. So in this case, the whales were down 50% and now they're pretty much just break even. So it just depends on the scenario, on how aggressive it is. This one wasn't that aggressive of an order because it's 10, and 10 is like the minimum threshold that I look for on the orders, if that makes sense.
Do you have a preference? So, right, all the different platforms, and it can get pretty expensive if you were to,
Yeah.
subscribe to each of them. Um, is Traditix your preferred one? I know Flowtopia is a thing that's coming or whatever, but it looked like it was cheaper in price. But is there, if you had to pick one, given right now, obviously the capabilities will change over time, but what would do it? Would it be Traditix?
Yeah, for sure. I haven't really used many of the other ones. I haven't really paid for very many, so I haven't really felt the need to get anything other than Traditix. Because I've had Traditix for pretty much since they launched, like 3 or 4 years ago. So, yeah, Traditix is by far my favorite one. But take that with a grain of salt because I haven't really used any of the other ones either. So, it's been good to me. Just with the data that they provide is pretty nuts. So, and they continue to add stuff too, which is nice.
Do they have historical? Like, can you go back and be like, because I know
Yes.
you copy and paste the charts on your channel, but you so you can go back and do historical, basically, was it back testing? I guess.
Yeah, they do. It depends on what kind of data you're trying to pull. But for most things, they do allow back testing. So like for what we're talking about now with Traditix or the Tradiflow, sorry, you can definitely back test to like as far as you want. I'm pretty sure. Um, I know previously they were allowing it, but I don't know about now. So it looks like maybe 3 months is the minimum. It used to be longer, I remember. But maybe because there's servers and stuff, they might have nicked that down a little bit. But it looks like maybe let me reset the filters here and see how far I can go. Yeah, so it looks like 3 months is the cutoff, which kind of sucks. But yeah, you can backtest most things. So like for MarketNet Flow, which I talk about a lot, you can backtest as far as you want, as far as they allow, obviously. So I can go all the way back to like May of 2023 and see how what MarketNet Flow looked like that day. See that? So it just depends on what kind of data you're looking for, I guess. Were you looking for anything specific that you wanted to backtest?
No, I was just curious about the capabilities because I think well, I love that you share your screen or whatever.
Uh,
Obviously, that's I should have my own account so I can be doing what I want to look at, other than either having to ask you or right if you're not on or
yeah,
things.
there's a lot of things on Traditix, honestly, that I don't even dabble into. Like, I probably only use 10% of Traditix, like the data they provide, because I don't really feel the need to branch out because everything's working that I'm doing right now. So, honestly, don't confuse yourself too much with the data. If you like to dabble into other things, it's perfectly okay. I actually prefer it if people start to learn new things rather than just copy what I know, because there's so many other opportunities that people have in as far as data that they can learn. Um, and I like listening to other people's viewpoints too. So there's a lot of things that I don't know about data that you can learn if you'd like on that platform. It's a big platform with lots of data. All right. Any other questions? I can move on if you guys don't have any questions about anything. Nothing about repeat flow or any of these, the regular flow data or anything.
I think you have a couple questions in the chat. Let's
Oh, do I? Where?
yeah,
Where are we?
in the upper yeah, because I think some of these guys are server muted.
Oh, in the group trading. My bad.
Yeah.
Let me see. Okay, I was in the OU chat room. Okay, let me see. Let me go through this. Sorry, guys. I didn't see this. Joey trades. Can you filter these out? Ticker spy and look for end of day expirations. Yeah. So if we go on over to like Photopia, we can just do an example on Photopia. So you can filter out spy. Let me actually. I got to reset all this. So you can filter out the tickers if you really want. You can see all the orders for a specific ticker live if you'd like. And you can look for end of day expirations. Yeah, let me see if I can do it here. Expiration date, you can look for today. Yep, see? There you go. So there's the SPY 0DTE contracts that came out. Good question. You can do that for anything really. So if I went on over to Traditex, I can do the same thing. Type in SPY and then I go to filter and I could do like, I don't know if they have a 0DTE filter. Oh yeah, 0 days, there it is. Yep, see? There you go. Let's see. I missed a couple of these questions. Sorry, guys. Isn't there something that shows the general flow of a stock instead of looking at all the orders? Yeah. So on Flowtopi, we don't have that yet, but on Traditex, we do. So if we go on over to this tab here, options under ticker dashboard, you can look at options. Let it load for a second. It's a little slow sometimes. So we can like type in Tesla at the top here, and we can see all the specifics of that ticker. So Tesla options, it gives a little review for us. Bullish, obviously, and then the 240 weekly calls are the ones that are most dominant. And then you can look at specifics of the daily premiums on each strike price and expiration, and then the weekly premiums heat map for the strike price and expiration. So there's a lot of stuff on here, but yeah, you can filter through and look through all the data here. I share this quite a bit. I share the top contracts a lot in chat, as well as the premium heat map too. Good question, Gospel. Does 10 orders mean 10 contracts? No. So 10 orders means that 10 separate people, so if we go on over to Tradieflow again, 6 different orders. So that's 6 different people buying however many contracts is just all that means. So like if we go into the specifics of this McDonald's one, oh, this one doesn't show it actually. So that one's a little bit weird. So if we go back to this, so let's take an example, this XLE one. I think it's just not loading. That's weird. Hold on. Why is this not loading? Okay, let's go on oh, that's why, because it's 3 months. Let me reset this. There might be a little bugs happening on Traditex right now. So let's go to this LLY one. I know that one was, yeah, there we go. So all these orders, it comes out, so it tells me that it has 10 orders, and it was signaled at on the 2nd at 10:23 Eastern time. So all these starting from this buy, you can see that the volume was 239. So this person bought 239 contracts with $185,000 premium spent. So you can see all the buys that happen. So this is an order, this is an order, this is an order, and it will just keep going on. And you can see the specifics of each one of how many they bought. I hope that cleared it up, Gospel. Yeah, Champ and Brit own Flowtopi. Yep. Thank you, Joey, for the link. How do you gauge between when to trust TA or flow? For example, some guy buys thousands in puts, putting money in put flow, but the TA is showing calls. So that's honestly, it's your personal preference what you want to do as far as the data. Now, I don't do much TA. Just telling you guys up front, I don't do a lot of TA, hardly at all. I normally just follow data. So yeah, it depends on what you guys want to do. I do follow TA like for day trades, like with EMAs and stuff like that, and GEX levels. I guess you can consider that TA, but as far as like trend lines and stuff like that, I don't do any of that. Yeah, it definitely depends on your trading style. I know several people that use data and TA at the same time, and I mean that's just on them. That's what they do, and I don't bash on anyone on their own trading style. If it works, then feel free to use it. Like I mean, I use TA, I guess, with EMAs. I guess you can definitely consider TA with EMAs and stuff like that. I guess I use pivot points and like a little bit of ICT too, so that's TA as well. But as far as like trend lines, support and resistance levels, I don't use. Yeah, it just depends. So like going back to our example with LLY, the TA was kind of whack. Obviously, it went long, or it went up when all those people bought puts yesterday, and honestly, they just kept holding it. So just based off of data, that would have worked out for you. Just depends on the instance again and your own personal strategy. All right. Any other questions? I think we went over, yeah, repeat flow. I explained this a little bit more in these slides. I'll post this. I gave a couple examples. I guess I could do a couple more examples for you guys. So let's look at the trading flow orders, the recent ones, and then I'll tell you the ones that I really look for. So if we refresh this page, let me make sure it works all good. So there's actually a lot of orders that came in just within the past week or so, and that's all posted here. Now the threshold that this tool uses is above 5 orders. So if there's 5 or more orders, it'll post it here on the specific tickers. So what I look for is I love looking for above 10 orders. So I pretty much just filter that out right away. And these are my swing trades that I normally get in. And if you've been around for a while, you guys know that I get into some of these swing trades whenever they do come out. So that's the threshold I look for right away, is 10 orders or more. And then I look for the premium. So if it's above $1 million, those are the ones I really pay attention to. But I ignore stuff like this. So this is an IWM put. ETFs I completely ignore on flow data, because more often than not, things like SPY, QQQ, IWM, all these ETFs, they use option data or option flow to hedge their positions on those big ETFs, because there's a lot of volume in those. So I just kind of ignore those on these big orders, if that makes sense. But yeah, so I look for the 10 orders above $1 million or more, usually. And then I look for the expiration if it's close enough for me to be a little bit more aggressive on that or be more patient. So like, for example, I'll give some good examples and then a bad example. So like for that Tesla one, I think we went over that one pretty well. But this ARM one, I actually missed this one yesterday. This one was a big one. This one actually went in the money. Oh my gosh. That's besides the point. But so this one came out yesterday. I completely missed the alert, but this one came out yesterday, the second at market open, I think, or no, 11:46 Eastern. So what is that for me? It's like middle of the day, right before lunch, it looks like. So this one was an ARM 170 call for August 2nd. And it was triggered, it kind of shows you on the daily chart where it was triggered at about $160 per contract, or sorry, 160 price on ARM. So you can see down here where it was triggered 159.79 on the spot price. So all these orders came in yesterday at around $800 per contract. And now that contract is way up. It's at 1,515. So it's almost up 100% just from yesterday. So this one met my criteria with 21 orders, above $1 million, 1.28. And it was also a pretty close expiration with about a month out. So that one was a really, really good one that I missed, sadly. But we can talk about a bad one. So this Apple one actually was a bad one. So this one actually fit my criteria as well, just below the premium spent with 19 orders. But what's cool about this is you can see the inflow and outflow, the buy versus sell flow on these. So these are the wells. So you can see the orders when they came in, and then you can see the specifics of the sells. You can see that they started selling large portions of it, 45,000, 35,000, until they were pretty much gone. So that's what these bars are. So you can see that right at the start, we saw a lot of buys come in, but like almost immediately we saw a lot of outflow with these red bars. So they got out for a loss, and that's pretty much what these red bars mean, is they got out. So that was actually a bad one. That one would have been a loss in a long time just based on my criteria. But these are down currently 40%, but they got out around minus 20% on these ones. So that one was a bad one.
20% where you would normally, like, right, if you got into this and you're like, it's going upside down, what do you have?
Um,
just
It's normally
People just
based
out of
off
that
of
20%. Yeah.
what they're doing. So if they're still holding it, I probably would too. It just depends on your own personal, um, like if you can handle that, if you can handle big losses, like holding minus 20, 30% or so. More often than not, I don't go below minus 30% on these, because it hardly ever happens. But yeah, minus 30% probably would be my cutoff point on this. But if I mean, there's so many other examples where they've held minus 50, 60% and they're back green, So again, it just depends on the certain circumstance. But more often than not, I set like a hard stop at like minus 30. And that would have bit me in the butt yesterday with this LLY one, I think, the other day, whenever that one came out. There was that LLY one where they were down 50, 60%. And now today, just a day later, they're back to break even. So this depends on what they're doing. That's why I pay close attention when I get into these swing trades, is I look at the inflow and outflow. So if we go back to that ARM one, you can see that they're still holding this one, right? Because there's not much outflow. There's a little bit of selling, and that's okay with these red bars, but you can see that they're holding most of their position. And some people even bought more today down here on this chart. Joey asks, so would you have used this data for a day trade or swing? If I'm up quite a bit, I'd probably take profits, yeah, if it's a day trade. So like the ARM one yesterday, I think it was. When was this? Yeah, yesterday. So that one was instantly up like 40 or 50%, like right when it came out, like within an hour or two. So yeah, I probably would have taken profits on that one, if not all of it. And obviously you guys see today the ARM's up even more. So that one's up 100%. Yeah, you can consider these day trades. It depends on, so like that Tesla one on Friday, I considered that one as a day trade because it was a 2-day expiration. And I got out like with 100% profits on that one within the day. So in your experience, is it better to use flow for stocks rather than ETFs? Yeah. I hardly ever use like SPY flow, QQQ flow, and stuff like that. That's why I use MarketNet flow. If you guys are interested in that, I'm going to briefly go over this as well. But MarketNet flow is like one of my all-time favorite tools to use because it averages out all of the stocks in the entire market, and it takes out the ETF flow. So that data is not flawed. It takes into consideration all of the inflow and outflow of calls and puts in the entire market. So you can see that obviously we're bullish in the market, and I use this to compare it to SPY and stuff like that. So I never ever use like SPY QQQ flow to make my decisions. You can still use it, but just from my experience using SPY and QQQ flow, any ETF flow, it's 50-50 with those, just based off the data. Because you never really know what they're getting into those for. Like it could be a hedge, it could be, you never know what it's going to be for. Gospel asks, so without hindsight, if you got into the ARM and saw all the selling, that would be a sign for you as well. Yeah. So if this ARM play, so say I got into this one yesterday, which I should have, I missed it. I guess I didn't get the notification on my phone, or I just ignored it. But yeah, so this ARM one, so if I saw a big like red bar, if I saw a lot of outflow in that one, like say $200,000, $300,000, I probably would start considering getting out of that position. Because what we're doing is pretty much just following smart money here. We're following people with large amounts of money because they know what's going to happen, So so I answer your first part of your question. And are the red bars update live? Yeah, it's live. So this is all live data. So you can see that today at like about 45 minutes ago, there was a sell on ARM. So if we look at the specifics here, we can see that at 12:26 Eastern, So about 20 minutes ago, there was a sell of $320,000 on this one. So it's a pretty decent size sell there. So they're just taking profits. I do not blame them at all because they're up like 100%. But yeah, the red bars are sells in this case. Please explain market net flow. Yeah, so I'll briefly go over it. I think I have a slide or two on market net flow. Yeah, so I got into the nitty gritty of market net flow on my past little class that I did in November. Let me know if you guys want me to link you to that because I can share the video on that. That one's a lot longer. I think that one was like an hour and 45 minutes, but I talk about market net flow, GEX, gamma exposure levels, convergence, and all that into specifics. I probably won't have time to go into that specific today because I was talking about options and stuff like that, option order flow. But if you guys are interested in that, I can definitely link you to that. But I'll briefly go over it. So market net flow, this is the live flow for you guys today. I'll base examples off of this. So I talk about this in High Roller every day. I use it specifically for my trades. So yeah, so the green bar or the green line here are calls, and then the red line down here are puts. So if the green line is going up, there's a lot more calls being bought. And then if the red line is going down, there's puts being sold off, which is bullish. And then vice versa, if puts are above, there's more puts being bought. And then if calls are going down, calls are being sold off. And I hope you guys understand just calls and puts. I'm sure you guys understand it if you're in here. But yeah, obviously buying calls are bullish and then selling puts are bullish as well. So in this case, we have a very large move up in calls and then puts are going down as well. So more people are buying calls, and you can see that we have a nice trend in the market today to the upside as people are buying calls. So yeah, that's
Sorry.
no, you're good.
The calls and puts, they're always gonna run. They'll never both be up, right? Typically.
They can be, yeah, they can be, and those are the days that I kind of stay away from. So days like this, where you can see the big divergence between the two, those are the good days to trade. I feel like, and I can give you examples of them. But days like today are really good because you can catch really nice moves to the upside. You can find entries for longs pretty easily because the direction of the market is so far bullish. You can see that with calls being bought in market net flow. And then on the contrary, I don't know if I'd be able to find one since we've been so bullish lately, but if we go back to like, I think maybe November was a bad month. Let's see. So, I mean, like your question here, you can see that calls and puts were kind of above here. It was bullish for most of the day. And then you can see puts climbing, and then we got a reversal in the market. This white line here is the price of SPY, by the way. So you can kind of see that where they're kind of close together and yeah, stuff like that. But you can kind of gauge where the market's going to be reversing in an example like this because calls are above. But you can see puts climbing. Oh, it went away. But you can kind of see here where puts started to climb, and then we saw the reversal in the market, So, again, it's just based on... Go ahead.
You're in the live chat, right? And you'll be like, okay, calls are ripping right now.
Uh-huh. Right.
What when you say, is it like a certain amount of it went from on that cumulative side on the chart, right, from like 30 to 35? Like what do you consider ripping, I guess?
Like $5 million is quite a bit. Like that's a good push. So like this one, it went from like 11:49 Eastern. It went from 10 million to 20 million, like within a couple minutes. So that's a good push in calls there. And that's pretty much like where we started to take off in the market today. So like right when that started to push up, you can see that we got that big swing from like 549.75, and we just hit 551. So we moved about like $1.25 in the market once we got that huge rip up in calls there. So anything really above 5 million is a big move in market net flow, I would say. because that's some aggressive orders, because you have to think about all the orders that come in during the day. So all these that are coming in every second, it seems like, it just averages out all of that in market net flow on this. So all the buys and sells of calls are averaged on this line here in market net flow in the entire market. So like a $5 million move is quite a bit. Did that answer it? Let me drop the video here, guys.
Yeah, no, that's perfect. That's perfect.
Let me find the video here. View my channel. I know it's on here somewhere. That's like one of my most popular ones. Yep, it's this one. Yep, here it is. I will share this in the chat, or where do you guys want me to? I'll just throw it in here in the group trading chat. I'm pretty sure that was the right one. Let me make sure. Yeah. All right. Any other questions about market net flow? That's just a brief overview of it. I'll share these slides too.
The great convergence. Do you mind on the bottom of that chart? Is that
yeah?
Again, when it goes gray, that means I know you said this 50 freaking times, and
You're good. That was my next slide here. So.
Oh, okay. Sorry.
Yeah, you're good. So convergence shows the strength of price action relative to flow data. So what that means is once there's strength in the market, it'll trigger. So like if calls are above, in this example, if calls are above and you can see there's strength in the market, the convergence will flip a certain color. So green is bullish, and then gray, it can mean either flat or opposite of flow. So I don't know if I put that in here. Did I? I don't think I put gray convergence in the description here, but basically all that means is it's that price is moving contrary to what the leading flow indicator is showing. So like for today, we can have an example here. So it was kind of choppy in flow in the morning, but you can see that we were green slightly, really, really small. And then puts started to climb slightly above here. And then it was red, right? So because the leading flow was puts there. And then the market headed down, it kind of notices where the pivots are. And then we got gray convergence right here. It's really, really small. I don't know if you can even see it, but it's a gray convergence around this area, this whole area. And now since puts were leading and during that time, the market started to head up. So it was doing the opposite of what the leading flow was. So since puts were above here, there was gray convergence and the market started to head up until calls started to take over the puts in this instance, and then we got the green convergence flip, and then the market just kept continuing there with this big green bars down here, if that makes sense.
Got it. Okay, so when it's green, basically that means SPY is up and call flow is up.
Uh-huh.
It's red, that means SPY is down, put call is up.
Yeah, puts are above calls.
When it's okay, so the gray is okay. It's the odd. Basically,
it's just the neutral, yeah. So it could mean price is doing the complete opposite of what flow is saying, or it could just mean that it's choppy.
So sometimes, right, you're looking for that flip in convergence. So that could mean green to red, or green to gray? Is it a different?
It could be either or. So my strategy, I know a lot of people like playing gray convergence because they like catching those pivot points. But for my strategy, I take the more, oh my gosh, the market's ripping, by the way. But I take the more conservative route. So I look for the huge divergence between calls and puts first, and then I look for entries on whichever way it's going. So in this case, right here, I took a screenshot. So in this case, calls are way above. Oh, wrong little marker here. So in this case, calls are going way up, right? So I'd be looking for a convergence flip to the upside so I can catch longs. So right here is when it triggered. So around this level, I know I draw this all the time. So it triggered around here at like about 550 on SPY. So on this chart over here, I don't know if you can see it very well, but it triggered around here. We got back down to retested 550, and then we started ripping the rest of the day. So this was be the A+ setup, honestly, for a flow times convergence and everything lining up together. But yeah, it can be gray to green, red to green, whatever your strategy is. But like I said, I just take the conservative route, so I like the gray to green normally.
And are you trading the SPY options, or are you doing ES futures?
I used to do options specifically like SPY, like 2 day, 1 to 2 day expirations, but I've been doing futures a lot now. So like ever since February, I've been pretty much just doing that exclusively. It works the same exact way because
Right. Yeah. So that's kind of my question was, is like you take what this this setup, right, would work for both, I guess, instruments.
yeah. So market net flow, it's the entire market. So uh, you can take trades on like ES and Q or MES or whatever you really want based off of that. And then that's where I coincide. I compare it to SPY all the time. I know I talk about SPY, but that's how I do it. I compare SPY and then I trade on like ES or MES, which is almost the same exact thing, pretty much. It's just the S&P 500. The reason I do that is because I can use these GEX levels because I use SPY GEX to kind of find price targets. So you can see um, over here, we can see that 550 was a super negative level, which we ripped through already. Um, I wish there was a better example, but today's a half day, obviously. The market's going to close in 3 minutes. Um, but yeah, that's why I do that.
So for the GEX levels, okay, and this is where, all right, so things can pull negative, things can pull positive, right?
Uh huh.
And depending on, like, right, if we're at, what are we at, 551 right now?
Yeah,
If,
almost 552. We're ripping.
oh, yeah, you're right. So let's say we're at 552, and all of a sudden 553 pulls very positive.
Uh huh.
What does that mean? I guess that's where I get confused.
It's normally
Because
like
when it says it's
so.
magnet or this or that, yeah, I can.
It depends on. It's hard to say because it's different sometimes. Like okay, so first things first, it's never 100%, right? Nothing's ever 100% in trading. But what I get out of that, so if a level goes super positive, is okay, price is never going to get above that level, and we're going to have either a pinning around that level or it's just going to be a huge resistance level. So since that's above where we're at right now, like say 553 went super positive, um, I don't think that it would. In my mind, I would say to myself that okay, we're never going to get above that level right now unless that data changes. Is what that means. Because positive levels can be either pinning or it would stay around that level or it would be a resistance level.
Like in that chart, we have, is that
This is
550
551.
that
This
was
one?
yeah. So you had,
This
yeah.
one.
So you have 551 going way up right
Positive.
now, and then you have 550 that was up, but now went back to neutral, I guess, right at
Right.
zero.
So in this case, so I just drew it on the chart here. So since that one was positive, once we broke through that level, now since that 551 level is super positive, I would look to either be a bounce off that level. Obviously, the day's over, so this data doesn't mean anything right now. Um,
Right.
but yeah, so if this was like a longer day and this was happening, I would look for. It might even happen right now. We got 19 seconds left, but I would probably say that that 551 level would not break. It would be a support level because it's so
So are
positive.
you looking for that, like that super like spike from, so like that 551, right? It spiked from whatever 11 a.m. to 12 p.m.
Uh huh.
Went from 400 to 1200, right? That's a 800 whatever
Yeah,
million
that's a big
thing. That's a
spike.
pretty big. That's a big spike.
Yeah.
What is, like, right? So sometimes it's just kind of floating around between 0 and 200. Is that just kind of once it gets out of that range?
I like looking at
What?
the movement. So this is zero DT.
Okay.
Um, this is zero DT data. So this moves a lot. But if it's like 100 or more, so these are in the millions. So if it's like above 100 million or more, I start to pay attention to it. especially if it's moving. So what's great about this chart is I can see what's moving now, like currently. So that 550 level went super super negative there at 1.1 billion basically, and GEX to the downside, negative. So that's super super strong right there. So you just got to look at
What
it.
about when? Yeah. Sometimes it'll you'll see these GEX levels, right? So uh, it'll drop, let's say, to like negative 500,
Uh huh.
and then it just hangs out at negative 500 for like 3 hours, right? And the chart is like it does the initial dip, and then it's just a straight line. So, and when it does that, what is that? Is that just saying eventually it's gonna get there?
Yeah, it can. More often than not, with zero DT data, it's going to happen pretty rapidly, like within an hour or two. But I've seen it where it takes all day, and sometimes it doesn't even happen. It just, like I said before, nothing's ever 100%. But yeah, if it's super negative like that, like down minus 500, you can like 85-90% of the time it's going to hit that. I would say.
Yeah, it's
You also
like
got to pay attention if it's like in the morning and it goes negative and it never moves the rest of the day, then the likelihood of that hitting is pretty. It starts to go down once it stops moving.
right, okay.
Because if you remember from, I don't know if you were here for the last class, and you can always watch it again, but these dealers have to. What Gex is, it's dealer positioning, right? So they have to hedge their positions a certain way, and that's what gamma exposure is, because they have to hedge those positions a certain way. So the more aggressive it is, the quicker they have to hedge it before the expiration. So.
Right.
So either if it's like your example, if it goes super negative and it just chills there all day. So there's like one or two examples, like two scenarios that would have happened. Either they rolled their contracts and they don't care about it anymore, or they're taking the loss. It's no in between there. And I've seen it happen before where it just never hits. Like it doesn't happen very often, but I've noticed it. Like actually today, that was a good example today. So that 548 level just today is super negative. So what that tells me is, okay, we're gonna hit 548 today, which we never did. We just kept going up. Today's a little bit weird because it was a half day, but yeah, that's an example right there where it didn't work. This one right here, 548. See how it was negative and it just flatlined the whole day and never moved.
Then you had 551, right? Saying that that could be a point of it could get there and stop there.
Yeah,
So that's where
so
I get confused. Is like you have two data points here, right? Kind of telling you an
yeah,
opposite story.
so that's
Which
what.
one takes preference, or do you just sit out until that kind of clears itself up?
Yeah, so in this specific example for today, that 551 level probably would have been my all. If I was in longs there, I probably would have taken all my profits at 551. Even though it continued up, you can kind of see on this chart here, we kind of pivoted around that level. See 551, we topped out like at 551.15 and we came down a little bit, but then we had a nice rocket up at close there. But yeah, those are the positive levels are usually my uh, take profit zones, and even the negative levels as well. Once it hits that level, you can, more often than not, you'll see a pivot off those levels, and those are my take profit levels.
And so, how are you using that GEX level? So if it's like, okay, 551 is the price target, and let's say we're at whatever 549, and then obviously then you're looking at that, and then you're looking at, okay, a net flow is positive too, so good for that, and it's green. So
Yeah,
okay, those are three check the boxes of like this is a good play, I guess. Is that kind of how you
yeah, that's
your
my.
mentality, I guess?
I have a. I wrote up my strategy of what I look for in each thing. I can share it in here. I shared it. Man, it's been a year and a half since I shared this one. This one is actually my updated one, but I can share my kind of strategy, what I look for at data points for my day trade specifically. We already went over like the swings and stuff for the flow data, but I just posted it in here. It's on my Twitter as well if you guys are interested. But um, yeah, those are like the three things that I look for in taking a day trade. is market net flow, convergence, and then the GEX levels. Those three things. So the first thing I look for is it bullish or bearish on flow? If it's bullish, okay, I look for long entries. And then if the convergence is great, I get ready to take long entries. And then if it's like an A plus setup, if there's a negative GEX level to the upside. You guys have seen that quite a bit, I'm sure, if you're in high roller. It was a little bit more difficult today because it was half day and there wasn't really any upside GEX levels showing negative today. But obviously flow was really bullish. We had a nice green convergence flip here. And I guess you could consider that 550 level was pulling quite negative there at about like 8 a.m. my time, so 11 a.m. is when that started to go down negative. And what is that? Yeah, you could have caught like a 50, 60 cent move or so just based off of that.
So negative from 1,000 positive to 0 is just as much as 0 to negative 1,000 in your mind. Like that's the
Yeah,
same.
yeah. If that's moving like currently, you got to pay attention to stuff like that. Three things in a simple way. Yep, gospel. OC3, yeah, it's closed, so it's half day because of 4th of July tomorrow. Market's closed tomorrow completely, and then market closed at 1 p.m. Eastern today. So, sorry I missed your question, Zenith. Isn't green consolidation and red a magnet? It can be. Are you talking about GEX levels or convergence? Sorry, that was like 10 minutes ago. I missed your question. I don't even know if he's in here anymore. Yeah, he's not. My bad. All right, guys. You guys have any more questions for me before I head out? I know it's been over the hour, but I'll take a couple questions if you guys are, if you have any more before I turn this recording off.
The only one that I came up with is SPX. Sometimes you switch between SPY and SPX.
Uh huh.
So usually they're the same or should be, right? Is there a is one? Do you use one as like kind of like a more of a leader and the other one? Yeah, well, I guess yeah. If they're not the same, what is that telling us?
So Jinja does a really good job with this in high roller with me because I don't look at the SPX very often like I should. But sometimes SpyGex, it doesn't do anything, and I just sit here on this chart and just watch it all day. But SPX sometimes tells you the better story of what's going to happen in the market because they're both different. They're different ETFs, right? But sometimes there's SPX leads better than SPY, and sometimes SPY leads better than SPX. So in like today's example, SPX probably would have been the better example because obviously we had bullish flow, green convergence, and everything, and these SPX levels were pulling super negative here. So you can see that 525, 5230, or 5330, excuse me, and 5335 were pulling super negative towards close today, and kind of check out where we ended today. So 53, I can't talk. 5335 was that last target, right? 5335. And look where we ended today, 5337. So just slightly above that level. So those higher levels would have told a better story than SPY did today. But it just depends. I like using SPY mostly. But if SPY is flat, I kind of turn to SPX for a little bit more of the story. And vice versa. Do you mind if we ask more questions? And yeah, man, go for it. Just make sure you tag me, Joey, because I don't really look in. No offense to you guys, I don't really look in the OU chat very much. I did the last few days though because Champ told me to do this class with you guys. Thank you for man. OC3, thank you for the kind words, man. You follow my screen in high roller, nice, yeah. If you guys are not in high roller, bro, I would definitely get in high roller like today. It's a money printer, I'm telling you. if you guys want discounts, I'm sure I could have some sway in that in High Roller. I'm sure. I think you guys do get discounts because you're mentorship members. I'm not sure. I'll have to double check. But if you're interested, just tag me. Yeah, you guys just feel free to at me whenever. You can DM me too. Just make sure it's the right me because I have a lot of fake people trying to impersonate me. But yeah, if you at me, I'll see it. But if you don't at me, I will not see it. Yeah, make sure you guys watch my longer video as well from November, I think it was. Okay, one last question here, Gospel. General questions: SPY and SPX the same but not the same? Yeah, they're both the S&P 500. The way I look at SPY is just a tenth of SPX basically. It's the same though. I'm pretty sure most of you guys are already high roller. I'm not sure though. All right, y'all. You guys have a great day. I'll post this recording later, and I'm sure Papa wants. I'm gonna give the recording to Papa too, and he'll post it on YouTube, and I'll post it on mine as well for you guys to watch. And then I'll post the slides in the next little bit. I'm probably gonna go snag some lunch, and then I'll post it for you guys. If you guys have questions,
Thanks so much, man. This is
yeah,
super helpful.
no problem. It was a good time. Hopefully, if you guys want to do me a favor, actually, leave like a little testimonial if you guys enjoyed the chat and at champ for me. and and if you guys want more classes from me, I can definitely do it if you tell him. I'm sure he'll do it. All right, y'all. I'll see you in the next one.